Thank you. I would now like to introduce our next witness, who came here all the way from my home state of Colorado, Mr. Terry Jones. Mr. Jones is from the city of Castle Pines, Colorado, where he resides with his wife, Carol. Terry Jones has over 40 years of experience working in the mortgage banking industry. Terry is testifying on behalf of the Colorado Mortgage Lenders Association, where he serves as chairman of their Legislative and Regulatory Affairs Committee. I'm pleased that Terry Jones could be here today, and I look forward to your testimony. Mr. Jones.
Thank you very much, Chairman Kaufman, Ranking Member Altmaier, and distinguished members of the subcommittee. The Colorado Mortgage Lenders Association is a 56-year-old organization made up of over 100 companies employing over 2,500 individuals. Over 75% of our members are small businesses that employ less than 25 people. In my 42-year career in mortgage lending, I've been a loan originator, a manager, an entrepreneur, and a small business owner. I've always been proud to be part of an industry that helps people and families reach their dreams of home ownership. I've seen many people in the business start as loan originators and then go on to start their own small mortgage lending businesses. These people have lived their own American dream, and in doing so have served the real estate markets and the buyers and borrowers of their local communities. The Dodd-Frank Act creates a super regulator for the mortgage lending industry in the CFPB. This is in addition to the oversight already in place by the states, FHA, VA, Fannie Mae, and Freddie Mac. The CFPB is tasked with issuing more than 100 mortgage lending rules over the course of the next 18 months. It will be difficult for small mortgage lending business to keep up with so many new rules in such a short time frame. So it is essential for the CFPB to develop an orderly process for its rulemaking initiatives, not only to ensure meaningful input from industry, small business, and other stakeholders, but to develop well-conceived and clear rules that are neither duplicative nor in conflict with those of the states and other agencies. The CFPB must also develop a process for providing timely, reliable guidance to the industry and to the state regulators well prior to the implementation of new rules. We believe that the CFPB has a historic opportunity to set the tone for the future regulation of the mortgage lending industry in finalizing the ability to repay rule and defining the qualified mortgage as a safe harbor characterized by traditional, well underwritten, and properly documented loans. By pursuing such a course, the CFPB can help to preserve the best practices and products of the industry, yet still curb the abuses of the early 2000s. If the CFPB takes this approach, it will be of great benefit to small mortgage lenders because it will create a safe, clear, safe harbor that they can rely on when making loans. If the CFPB chooses to adopt the qualified mortgage as a rebuttable presumption, we believe that the increased levels of litigation will force many small lenders out of business. The CMLA believes a qualified mortgage safe harbor will define the arena in which most loans will be made. The risk to smaller business in particular will be too great for most of them to venture outside the qualified mortgage parameters. Consumers in Colorado and across the country need a viable small business mortgage lending industry to provide a competitive local alternative to the large national lenders that dominate the marketplace today. The CFPB is also responsible for enforcement of the SAFE Act, which requires loan officers for non-bank firms to meet education, testing, and financial standards, while bank loan officers need only be registered. This creates an unlevel playing field and additional costs for small non-bank lenders and creates unequal protection for consumers. In addition, licensed originators can move freely to depository lenders from licensed originators, but the reverse is not true. A loan originator working for a bank will have to go through the entire licensing process in order to be able to be employed by a small business lender. We ask that the CFPB undertake rulemaking as soon as possible to create a transitional license to allow registered loan originators to move from depository institutions to non-bank lenders for a limited time while they complete their licensing requirements. Finally, it is important for the CFPB to address the loan officer compensation rule under the Truth in Lending Act and reconsider some of the rigid requirements that were recently imposed by the Fed on the ability of a small business to pay its employees in a manner consistent with the profitability of the loan products they produce. Confusing standards and lack of official guidance from the Fed has created some unusual outcomes. For example, the current rule severely impacts revenue bond programs that serve low to moderate income and rural borrowers. These programs typically limit fees and that can be charged to the borrower, yet the loan officer compensation rule specifies that the loan officer must be paid exactly the same on these loans as any other. This can easily cause losses on these loans, and many lenders will be unable to offer these programs, these affordable loan programs. We urge the Bureau to clarify this and other problematic issues with the compensation rule. We respectfully urge Congress and this subcommittee to carefully monitor all of these new rules and to be certain that they do not unwittingly harm American families, small business, the mortgage market, the housing recovery, or the nation's economic recovery. I thank you very much for the opportunity to testify before you today.